Lake Mead, the reservoir that keeps Las Vegas alive, is only 29% full. Its surface has fallen more than 160 feet since the year 2000, reaching a record low in 2022. A city built on spectacle, drawing over 40 million visitors a year, now faces a water crisis it can no longer outrun. And the forces behind it go far deeper than drought. The pressure is constant. Every morning, our team walks the property before the first guests even wake up. We check the pools, the fountains, the kitchens, anywhere water moves. It's not just about luxury anymore. It's about making every gallon count. Last year, the city hosted 38.5 million visitors, and every one of them expects the lights, the shows, the endless flow of drinks and ice. But behind the scenes, we are tracking usage down to the hour. We've swapped out thousands of fixtures, replaced turf with desert landscaping, and retrofitted cooling towers. Even so, the numbers keep us up at night. On a peak weekend, a single resort can use over 1 million gallons a day. That includes everything: guest rooms, restaurants, pools, and all the back-of-house cleaning that nobody ever sees. We run audits, fix leaks, and shut off fountains at the slightest sign of a drop in pressure. There is no margin for error. If the supply falters, the impact is immediate. With this many people, even a small disruption ripples across the strip. The spectacle draws crowds, but the reality is measured in spreadsheets and contingency plans. The city's reputation depends on what happens behind closed doors, where conservation isn't a slogan, it's a daily requirement. Lake Mead's decline is measured not in anecdotes, but in hard numbers collected over decades. The U.S. Bureau of Reclamation's time series chart tells a story of steady loss since 2000. At the start of the new millennium, the reservoir hovered near its full pool elevation of 1,229 feet above sea level. Today, the surface sits roughly 160 feet lower. In June 2026, the official gauge recorded 1,049.47 feet, just above the threshold where Hoover Dam's turbines struggle to generate power. The record low, set in July 2022, was 1,041.30 feet, the lowest since the lake first filled in the 1930s. This is not a brief dip or a seasonal fluctuation. The drop has persisted year after year, interrupted only by short-lived bumps that never restore what's been lost. The reservoir now holds about 29% of its designed capacity. In practical terms, that's a loss of more than 21 million acre-feet of water, enough to supply every household in Nevada for decades. The data show a system under chronic stress, with each year's deficit compounding the last. As the chart's downward slope grows steeper, the question is no longer whether the crisis is real, but what forces are driving this relentless decline. Nearly a century ago, state negotiators gathered in Santa Fe to divide the Colorado River's bounty. The 1922 Colorado River Compact became the foundation of what is now called the Law of the River, a legal web that still governs every drop Las Vegas receives. The agreement split the river between the upper basin and lower basin, granting each side rights to 7.5 million acre-feet per year. That number was not chosen by accident. It reflected the best estimates of river flow at the time, pegged at roughly 16.5 million acre-feet annually. But those estimates were based on a handful of wet years. Modern hydrology shows that the river's long-term average is closer to 12 or 13 million acre-feet. The result is a system where legal entitlements far exceed what nature reliably provides, an over-allocation baked into the rules from the start. This mismatch means that even before drought or climate change, the compact guaranteed more water on paper than the river can deliver in reality. Every allocation, every cutback, every shortage tier traces back to this original legal structure, which still shapes the options and constraints facing Las Vegas and the entire Southwest today. The Colorado River's shrinking flow is not just a matter of legal miscalculation. It is a direct response to rising temperatures in the basin. Peer-reviewed studies led by climate scientist Brad Udall have shown that average annual runoff has dropped by nearly 20% since the turn of the century. The mechanism is straightforward. Warmer winters mean less snow accumulates in the Rockies, and what snow does fall melts earlier in the spring. This reduces both the volume and the timing of runoff that feeds the river. Where the compact's authors assumed a river averaging 16.5 million acre-feet, modern measurements show a typical year delivers only 12 to 13 million acre-feet. Udall describes this as a case of aridification, not just drought, a permanent drying, not a temporary shortage. The U.S. Geological Survey estimates that for every degree Celsius of warming, the river's flow drops by up to 10%. That is a reduction of 500,000 acre-feet per decade, enough water for 2 million people. No management plan or legal fix can conjure snowpack out of a warmer sky. The river's new reality is set by physics, not policy. Clark County's population has surged from about 1.6 million in 2000 to more than 2.5 million by 2024. A growth rate that outpaces most major U.S. metro areas. This expansion is not just a matter of new homes on the suburban fringe. It drives up water demand across neighborhoods, businesses, and public spaces, multiplying the strain on a supply already stretched thin. The Southern Nevada Water Authority reports that in 2024, the region used 212,400 acre-feet of Colorado River water, well below Nevada's legal allocation, but still a substantial draw from a shrinking source. The average Las Vegas resident uses around 90 gallons per day, a figure that reflects aggressive conservation but remains elevated compared to many U.S. cities due to the city's unique mix of residential and hospitality needs. New arrivals, ongoing construction, and the constant churn of daily life all translate into persistent demand. Each additional resident, each new development adds pressure to a system where every acre-foot is now tracked and contested. The city's rapid growth has become inseparable from the broader crisis facing the river and its reservoirs. Federal and local agencies have spent years building a buffer against the river's decline, but every safeguard has a limit. The Drought Contingency Plan, adopted in 2019, set a framework of voluntary cuts and water banking to slow Lake Mead's fall, yet its provisions expire in 2026. Anticipating lower elevations, the Southern Nevada Water Authority invested $650 million in a third intake tunnel, deep enough to keep drawing water even if the lake drops below 1,000 feet. This engineering feat buys time, not certainty. As SNWA's general manager John Ensminger put it, "We cannot engineer our way out of a supply that isn't there." The tools are in place, but the window for new solutions is closing. Hoover Dam's turbines once powered the Southwest with steady reliability, but as Lake Mead has dropped, so has the dam's output. Hydroelectric generation has fallen by nearly 30% since the turn of the century, forcing local utilities to buy more expensive power on the open market. That cost does not just hit balance sheets. It ripples out to ratepayers and city budgets. In 2025, Moody's Investors Service issued a memo warning that continued water declines could threaten the credit rating of Southern Nevada's municipal bonds. Municipal finance analyst Rachel Liu notes that if water deliveries are curtailed, repayment risk for water utility revenue bonds rises. The warning is clear. The region's financial stability is now directly linked to Lake Mead's water line. As hydropower wanes and bond markets take notice, the economic stakes of water scarcity become impossible to ignore. Water scarcity on the Colorado River is not just a matter of engineering or local restraint. It cuts across borders and legal traditions, raising questions of equity and obligation. The Colorado River Indian tribes hold senior rights that predate most state allocations, a status recognized in court filings and federal settlements. Their claim takes precedence when supplies run short, meaning any future cuts must honor tribal seniority before cities or agricultural districts see reductions. At the same time, the United States is bound by treaty to deliver 1.5 million acre-feet of Colorado River water to Mexico each year. Even as Lake Mead declines, these cross-border commitments remain in force, adding another layer of complexity to already strained negotiations. When leaders debate new supply options, such as large-scale desalination plants, the price tag quickly becomes clear: more than $1,000 per acre-foot, with a decade or more before any water arrives. Each alternative carries steep costs, whether measured in dollars, time, or political capital. The choices ahead are not just technical, they are deeply tied to questions of fairness, sovereignty, and international responsibility. Today, the Southwest's water future turns on a narrowing margin. With Lake Mead at 29% capacity and legal frameworks under stress, every decision now carries generational weight. The math is no longer abstract. For millions, the stakes are immediate, and the window for sustainable solutions is closing. Every crisis begins as a crack, small enough to ignore, until it isn't.